Welcome to your daily stock market summary from MarketSnap. Hey everyone, I'm thrilled to dive into today's market action with you. We've got a packed day with some intriguing moves, key earnings updates, and broader economic insights that every long-term investor needs to hear. Whether you're in for the long haul or eyeing short-term trends, let's break it all down together and see what's shaping the markets right now. Let's kick things off with a look at the major indexes. The U.S. stock market showed some resilience today after a shaky start to December. The Dow Jones climbed a modest 0.39%, signaling a bit of stability among blue-chip stocks. The Nasdaq outperformed with a 0.59% gain, reflecting strength in tech-heavy names. Meanwhile, the S&P 500 edged up by 0.25%, holding steady as investors digest mixed signals. However, the Russell 2000 slipped slightly by 0.17%, showing some softness in small caps. Overall, it's a mixed bag, but the upward tilt in major indexes suggests cautious optimism is creeping back in after Monday's pullback. Now let's zoom in on some standout performers. Among large-cap gainers, we've got some impressive moves. Intel surged over 8%, leading the pack with strong momentum, possibly tied to recent news about potential foundry deals. Boeing also caught attention with a massive 10% jump, fueled by upbeat comments from their CFO about a robust recovery and higher delivery forecasts for next year. AppLovin and Shopify weren't far behind, each posting gains above 5%, showing the tech and consumer cyclical sectors still have plenty of juice for investors looking for growth. These moves highlight where smart money is flowing right now, and for long-term players, these could be names to watch for sustained strength. On the flip side, not everyone's celebrating today. Among large-cap losers, Imperial Oil dropped over 3%, reflecting some pressure in the energy space amid fluctuating oil sentiment. McKesson also took a hit, down more than 3%, possibly due to broader healthcare sector concerns. Advanced Micro Devices slipped a couple of percentage points, a bit of a breather after its strong run this year. These dips remind us that even in a generally positive market, there are pockets of weakness, something long-term investors can view as potential buying opportunities if fundamentals remain solid. Turning to the market movers, the usual suspects are driving volume. Nvidia continues to dominate as one of the most active stocks, with a slight uptick today, reinforcing its role as an AI juggernaut. Tesla saw heavy trading too, though it's hovering near flat after some volatility. Intel, as we mentioned, is also among the most active, with that big gain drawing eyes. And Palantir popped nearly 2%, continuing to ride the AI wave. These names are the pulse of the market right now, and for long-term investors, they represent core themes like tech and innovation that aren't going away anytime soon. Speaking of activity, let's glance at the most traded stocks by volume. Beyond the big names like Nvidia and Tesla, we've got some interesting players. Plug Power jumped almost 10% with heavy volume, hinting at renewed interest in alternative energy plays. Bitfarms, despite a 5% drop, also saw significant trading tied to the crypto volatility we're seeing. These high-volume movers often signal where short-term sentiment is swinging, but for long-term folks, they're a reminder to look past the noise and focus on underlying value. Shifting gears to earnings, it's a busy week with some heavy hitters reporting. We've got names like Salesforce, Marvel Technology, and Ulta Beauty on deck, which could set the tone for tech and retail sectors. Last night, MongoDB crushed expectations with a double-digit revenue jump, sending its stock soaring over 22% today, proof that cloud and data solutions are still hot. Credo Technology also impressed with strong quarterly results and upbeat guidance, pushing shares higher. These reports are critical for gauging where growth is headed, especially in tech, and for long-term investors, they're a window into which industries are building sustainable momentum.
Get exclusive AI summaries of every earnings call. No more reading hours of transcripts. Access revenue segmentation, 5-year analyst estimates, SWOT analyses, and full financial statements. Plus track upcoming earnings, dividends, and market events with MarketSnap's calendar app. Create a free account at MarketSnap.com.
Let's touch on some broader economic news shaping the market backdrop. There's chatter about potential trouble in short-term funding markets, which could nudge the Fed to act sooner rather than later. Inflation concerns are simmering too, with consumer sentiment showing fragility despite record holiday online sales. Plus, tariffs are back in focus, with delayed impacts potentially hitting corporate headcounts next year. For long-term investors, this means keeping an eye on macro risks. Interest rate moves and policy shifts could sway your portfolio more than daily stock swings. In the medium term, though, these pressures might create buying opportunities if valuations dip on overblown fears. Looking at the bigger picture over the past week, some large-cap stocks have posted serious gains. Intel again stands out with over 10% upside, showing sustained momentum. AppLovin matched that with a similar jump, while Synopsys climbed nearly 9%. These weekly winners underscore strength in tech and innovation-driven sectors. And for long-term holders, they're a reminder to stay exposed to growth areas even amid broader market choppiness. On the weekly downside, Zscaler took a hard hit, dropping almost 10%, likely tied to broader tech pullbacks and valuation concerns. SanDisk fell 7%, and Rocket Lab USA shed over 6%. These declines highlight how quickly sentiment can shift in high-growth names, but for patient investors, they could signal a chance to scoop up quality stocks at a discount if the fundamentals hold up. Finally, let's wrap up with a quick sector snapshot. Over the past week, basic materials led the charge with a standout 3.75% gain, likely fueled by rising commodity prices and gold strength. Consumer defensive also shone, up 2.34% as investors sought safety. Energy gained nearly 2%, reflecting oil market dynamics. These sector moves show where stability and cyclical growth are converging, key areas for long-term diversification. On the flip side, healthcare lagged with a 2.61% drop, pressured by broader sector challenges. Utilities and industrials also slipped over 1%, showing some defensive and cyclical weakness. These underperformers might be worth monitoring for long-term entry points if macro conditions stabilize.
MarketSnap brings everything long-term investors use daily into one clean, fast platform. Explore stock financials, SWOT analysis, valuation ratios, 5-year analyst estimates, and our intrinsic value calculator, built with real fundamentals, not hype. All in a layout that's simple to read and ridiculously fast to navigate. And when you want to talk investing, join Nexus, our community where investors share valuations, posts, and stock discussions, all connected directly to the data. Use our stock's intrinsic value calculator to run and save real valuations with no spreadsheets. Share your analysis and valuations with others in the Nexus community. Get daily market summaries in video, audio, and article formats. Track the market with our earnings, dividend, and economics calendar. Our homepage gives you a real-time market overview with interactive heat maps, top market movers, and major index performance at a glance. Track daily performances, discover the most active stocks, and analyze performance across different timeframes, from weekly to yearly trends, and see which industries are leading or lagging. It's free to create an account, with optional access to premium forward-looking data. Try it now at MarketSnap.com and invest with clarity, not noise. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in, and make sure to stick with us for daily updates and deep dive SWOT analyses to keep your investment strategy sharp. Whether you're navigating short-term turbulence or building wealth for the long haul, we've got the insights to help. See you tomorrow.